What's up, ladies and gentlemen? Welcome to another edition of Dream Firm Spotlight. We have a very special guest today, and I want to make a very clear disclaimer before we go any further. Ryan Bakke, I believe I pronounced that correctly, he'll hopefully correct me a little bit, is not actually a client of Dream Firm's, but he got put on my radar as someone who's doing some exceptional things in the young entrepreneurial accounting space. Indifferent. So Ryan, it's a pleasure to have you with us, and I'm very excited to learn more about your journey of creating a seven-figure firm by the age of 25. So if we could, why don't you just tell us a little bit about your background and how you got started with entrepreneurship to kick things off here?
Sure. So I went to school for accounting and finance. That's what I went to college for. When I was in college, I realized that I wanted to work at a Big Four. And we had 5 kids in my graduating accounting class, and 2 of us actually ended up at Deloitte. We were not supposed to get there. So that was kind of my goal. I wanted to scale up at Deloitte, or maybe be a CEO one day, use my brain and knowledge to continue to further the ladder. And I realized that pretty quickly through two and a half busy seasons at Deloitte, that a lot of the stuff there was a lot of arbitrage, right? Like they were charging the client $500, $600 an hour for my time, and then turning around and paying me the equivalent to what a worker at McDonald's makes when you add up the hours and then when you add up the pay and divide by the hours. So I said, I kind of want to start branching out. And so I started researching and listening and trying to learn how to scale, and started my own CPA firm. And it was right around the same time when I really got interested into real estate. I spent lots of my days learning those strategies that real estate investors utilize. Some of you might have heard real estate professional status or cost segregation, 1031 exchange, how to get around net investment income tax, all these strategies I started learning. And my dream job was actually to be a motivational speaker. And I wanted to be like a Simon Sinek or one of these motivational guys that goes to campuses and universities and talks. But I find that I get to be a motivational speaker in the expertise and the subject matter knowledge that I have today. And so now I have a real estate CPA firm. We have a little over 200 clients that we do tax planning and filing for. And from there, I've also built out this education model business. I think the number one thing that a lot of CPAs, accountants are already doing for clients, but not getting paid enough for, is what's called access. Access to you, or access to a program or some sort of training. Just having access, you should be charging for that. And so I have programs, trainings for people who are all walks of life when it comes to real estate investing, whether you're just getting started, you're buying your first house, all the way up to a more seasoned investor that maybe has 10 to 12 deals. So my firm is now it's very education and consulting based versus the traditional just tax filing and maybe a couple of phone calls a year to talk about their situation. I have clients that are learning from me via education, just like Zoom webinars like this. And then I have higher end clients that are doing one-on-one planning with me.
You said when you were dreaming of working for the Big Four, and then I think you met the reality of it, is you had a bit of a chip on your shoulder because of, I think, the college you went to, and then also being at that prestigious environment for work. And then when you got into it, you did the math, right? And I think this is an important thing for a lot of people to do, whether it's entrepreneurship or whether you're in the Big Four or working at a smaller firm, is the hours you're working compared to the pay that you're getting. And when you actually look at that, and you said you were basically making what a McDonald's employee was making, and then you compare it against what the firm's charging to access your time and expertise to then pass along to a client, and you go, this doesn't make any sense.
Yep.
And then you decided to do what from there? And this.
So it was understanding that I can accomplish more with less. So when I was at Deloitte, I was, I guess we'll call it moonlighting on the side, but I had gotten to the point where I was making more money in my firm working 10 or 15 hours a week than I was making my entire W-2 salary at Deloitte. And that's when I realized that, I just so happen to have a green shirt on today too. That was when I realized that I could leave and I could do my firm full time.
I want to bring up another quick point that you made, which was the belief that there's no money in teaching and then doing a complete 180 essentially and realizing that there's actually an abundance of money in teaching, specifically what your expertise is in both a broad setting, because you have a podcast, and quick shout out, right? Learn Like a CPA, everyone go subscribe it. It's fantastic content. And then you also have more of a packaged access form of your education. And I want to talk about both of these, the broad market education, and then how you were able to productize and package your training, your understanding of real estate investment from small to large. So walk us through the first part. When did you start your podcast? What other forms of educational content are you putting out there? And then how did you parlay that into more of a structured paid environment?
Yeah, I started the podcast January 2022 is when I believe I launched the first episode. So it's been 20 months now that I've had the podcast. Before the podcast, I was releasing very short social media clips where it was like 45 seconds to a minute of me talking about a strategy or talking about this opportunity that people can apply for or qualify for in the real estate space. Maybe it is. What I learned with tax and people is people have very low attention spans, very short attention spans. And so the short form content, a minute of you talking about something or 30 seconds of you talking about something, attracts people into your audience. It brings people in. But it's that longer form content, that 15, 16-minute podcast that they can listen to on the drive, like to and on the way from work, that really nurtures the prospect or nurtures your audience into getting them to buy you something and to buy something from you, whether it's a service or you're doing a tax return or an education product. There's 4 high value scarce skills that you can have. And one of them is the ability to capture and attract attention from other people. And whatever it is in your niche that you want to do when it comes to accounting, whether it's HVAC, real estate, crypto, small businesses, you want to put that out there in the world that you are the person that does that. You are the person I call it the person of interest. Person of interest, you want to let the entire world know I'm an accountant and this is exactly who I help. What is the term? The riches are in the niches. People will pay for that expertise and that knowledge. I would say your first piece of content should be whatever strategy or whatever you love to explain the most, like that should be your first clip. As far as recommendations go, so the way that I do content is we will do a long form podcast, anywhere from 15 minutes. If we have a guest on, maybe it's like 35, 40 minutes. And then we will clip the short form from the podcast. And that's an easy way to kill multiple birds with one stone. I do content one day per month. Your first piece of content, though, should be whatever it is, whatever strategy you love to explain the most.
Okay. I love it, right? Which is don't overcomplicate it. And again, I think that we have to just separate the 2 points here is you don't start with a long form piece of content, a social media room, right? A dedicated editor and then being able to disseminate those clips all over the place. You start with building the skill of just consistency, whether it's once a day, once a week, you're just sharing and getting familiar with the space. And then once you get good at it, you have a library of things that you can make smaller, put in different places. And then you also more than likely have the resources from the inbound leads that you get from sharing your expertise that allows you to make the investments in amplifying how many people see your message. But absolutely fantastic. I want to get a little bit more into your sales process now. And specifically the sales process, it sounds like you also sell training materials as opposed to just tax filing and tax planning. So I want to break this into 2 categories because I know people are very interested in courses. How can they get more involved in it? And the vast majority of the courses that I've seen produced by accounting professionals, they generate next to zero sales because they're usually trying to sell things that are more related to here's how to use QuickBooks. And you can just learn most of that online for free, or you can learn QuickBooks. So talk about the value differentiator for your paid materials. And then I know a lot of people are very curious, actually, of course, about the tax filing and the tax planning in terms of the packages and how you typically do that. So if you could split that into 2 separate answers, and I can follow up with one.
I'm going to blow it out of the water, hopefully.
Go ahead.
Okay. So the sales process is really about building trust and rapport with your prospect before they even get on your calendar. And that's through the social media, that's through the Facebook groups, I call it multiple touch points. If you're going to sell a high ticket product, so we have offers ranging anywhere from 5K to 15K. if you're going to sell a high ticket offer, you have to have multiple touch points with the prospect. And so what that means is they're not just seeing me in one place on my website. They're seeing me multiple areas. Maybe they see me on a Facebook ad, or they see me in somebody's Facebook group, or they see my post on LinkedIn or Instagram, or they hear my podcast. So what I do is I have, I would share my screen if I can in a little bit, but I have a routing form via Calendly. And what that does is I'm able to ask the prospect questions. What is your income? How many rentals do you have? What is your experience? If you work with a real estate CPA, or have you worked with a CPA or an accountant before? All these types of questions, and I'm able to qualify the prospect before they even get on the phone with me. I do, like, you will never see me pick this thing up. I do not give my phone number anywhere. It's all done through email. It's all done through online. So I'm artificially qualifying people through that, through the various chains of social media, right? As far as the sales process go, having multiple offers for people, no matter what stage of the game they're in, all the way from that, what I call DIY, so that's your course, all the way down to done for you, which is working with you one-on-one, okay? You want to be able to route the prospect to the right fit. And I've closed a lot of people just by telling people the truth. Hey, Tyler, I don't think you're ready for a VIP client. I don't think you have the big portfolio. I still think you need some handholding. Why don't you come with my academy coaching program, right? And what that does is it builds trust in the prospect, because they feel that you're not just trying to sell them on the highest service, but you're actually taking the time to get to know them and figure out. I've also used that in reverse. Basically, if you give the prospect, this is what's funny. Let's say you have 3 different services, right? You have a $1,000 product, a $3,000 product, and then a $6,000 or $7,000 product, right? You see this all the time when you guys go to buy like products or software. There's the low value, the middle value, most bought product right there, and then there's the higher end service, right? I've told people, hey, I don't think you're a good fit for this high end product because X, Y, and Z. And then the prospect will do one of two things. They will either defend why they should be there. Oh no, I am a big investor. I am trying to build financial freedom. I am trying to do these things. Okay, boom, close. Or, hey, tell me a little bit more about the fit that you think I'm the right spot for. So I'm gonna just whiteboard this out. So the way that I have it set up now is, so just so everybody knows, this is your overall, I'm doing this injustice, but I draw on Zoom all the time. This is your overall funnel. So at the very top, these people don't pay for any of this. Their social media, podcast. More importantly, it establishes what I call the transfer of authority. So the transfer of authority is you're taking somebody's brand and their likeliness, and you're getting their authority. So it makes it your job of closing a lot easier. Think about this, right? If you saw a webinar that said, hey, a 25-year-old kid is going to come on here and teach you how to run a CPA firm, you wouldn't sign up. But Tyler says, hey, I got this guy, he's really super sharp kid. I'm using Tyler's authority because you guys know and trust Tyler, and his authority is bleeding onto me, right? So you want that same effect with your cert. If you're going to conferences, if you're going to meetup events, networks, use that person's authority, and don't feel it as if like you're taking from them, right? You're going to give value to their audience if you're going to do a networking event or a podcast, but you're using what I call the transfer of authority. And that's super important in building this brand and social media, etc. So at the top, social media, podcast, you might have Facebook. So I have my own Facebook group. It's called Tax Strategies for Real Estate Investors. It crushes. I have almost 7,000 real estate investors in there. So whenever I want prospects or whenever I need to make money, I can shoot that group and probably make some money, right? Social media, podcasts, Facebook groups. Now, the one thing that I will tell you that the most important thing in any online business is your email list. Your email list is like the golden asset that you can have. Your email list is the most important place, okay? Your email list, you should be driving people to your email list. On the website, when they're scrolling down on their website, there should be a pop-up that says, hey, download these 5 tax-free tips. Give me your email. Your email list is the most important asset that you have, because nobody can take it away from you. But so the 3 different services that I offer on the, really on the education side is, you're going to have what's called a DIY offer. So DIY stands for do it yourself. This is typically going to be like a course or program or something where you as the accountant or you as the educator are going to film it one time and you're never going to have to do it again. Now, here's where a lot of people go wrong on courses because they leave it open for everybody indefinitely. If you just have a course and I say, hey, here's my course. I know you don't want to become a client yet, but go take this course. You're not giving them an incentive to jump off the ledge and into your course. Think of it like those shitty infomercial commercials that would say, hey, the next 5 callers get, not only do they get this, but they also get all this other stuff for free too. Or hey, if you don't call within the next 48 hours, we're not going to have it for you. That's what's called, and what the DIY, what's really important about the DIY is doing what's called a product launch. Product launch formula. There's a book by a guy named Jeff Walker, and he explains exactly how to do a product launch formula that builds what's called scarcity and urgency in your offer. So, hey, we only have 15 spots available for this new program. We only have 10 seats left for this course. People want what they can't have, but they also need a reason to jump off the ledge. So maybe it's, hey, if you don't buy the course in the first 14 days, the price is going to go up, or all these little tips and tricks that you can do to, again, see that scarcity and urgency in your course or your program that you're probably not doing that will 100% lead to more sales. The next step on this ladder, and this is where that access becomes extremely important, and this is what I talked about earlier, is what's called the do it with you offer. And this is what's so funny about this is these two can be pretty much replaceable. I could have a 10-week course that is a combination of, there might be a course, but then there also might be do it with you. So let's say I did a 10-week business tax strategy. If I was to do it with you offer, which is like a coaching program, I might drip the first week of content on Monday, get on a coaching call on Friday and answer all the questions that somebody has about the content, right? And then the next week, drip it on Monday, get on a coaching call on Friday. And so the number one thing with DIY is the access to you, right? People are getting access to you. And so you could charge a lot more for that access because people are getting answers to their questions. So, I might charge $9.99 for the do-it-yourself course, but I'm charging $5,000 for the do it with you access to me, right? Which might just be the course plus the access to me. And then lastly, I'm sure everybody's got a ton of questions here, but lastly is the done for you model, okay? And I really just want to sell this because it's 1 hour a week of my time. So this is at a $50,000 a month run rate for me right now, is this do it with you offer. This is the only thing I want to sell. But there's an important reason to having multiple offers because it anchors that value. Because my done for you price, I do a lot of stuff here. So I do tax planning, entity, I look over their entity structure. I do equity portfolio analysis. So I basically let them know, hey, you got $400,000 of equity in this long-term rental. It's only making you 10 grand a year. You'd have to rent the thing out for 40 years just to break even on what you can walk away with today. How do we get out of that tax efficiently? That's what I do in the done for you model. And this is the price sticker that I'm charging for that now. And the price of this is irrelevant, that what I'm charging, but this is exactly how you can kind of implement it in your offer. Because if you give people these multiple different options, what this 15 grand really does is it anchors the value of this 5,000. Hey, I'm still getting the access to Ryan. I'm still getting to pick his brain, but I'm getting it at a third of the cost of whatever it would be to work one-on-one strategically with him.
And I think you gave a really excellent high-level overview of your sales funnel and your marketing funnels, which is you're disseminating the information for free in a variety of different formats, both controlled mediums like email marketing and your Facebook group, and then not so controlled areas where there's more risk, where you've got Instagram and Twitter, and things happen on those platforms, but you're minimizing the risk. And then from there, you're also giving people options depending on where they are in their entrepreneurial journey. So you can capture more of their wallet share depending on their proclivities to invest with you and what they're looking to do and accomplish. So again, for the benefit of the audience, is there anything else? Because I think most people hear that and go, why would someone buy that? But it's the whole picture, right? It's the authority you have from the course. It's the fact you're seen on podcasts. It's the fact you're sharing your information willingly, and that you're building this sort of personality that people want to be a part of because you've shared so much, you've created that reciprocity. But just to be clear, is there anything else in that mid-tier package that people would be like, oh, there's a lot more going on here? Excuse me.
I think it's really the access to be able to get their questions answered. And the other way that I'm trying to implement is just being able to be in that group. There's investors in there that are in different markets, and you might find somebody in that group that is also in Panama City Beach. I don't, maybe I meant to say that, but when they join that program, they do get a 1 hour, call with me on the front end to kind of go over their situation. And then it rolls into the weekly office hours. So just wanted to point that out there. And that goes back into what I call the delivery process, because everybody's heard of Amazon, right? So when you have an urge to get something, you pull up Amazon and within 30 seconds, it's boom, and you have the product and it's on your way. But how many people have ordered something on Amazon and it shows up 3 days later, and then they're like, oh, well, that is exactly how the sales process works too, is you want to make sure that as soon as that lead comes in, they're getting qualified, they're getting vetted, and they're getting on the calendar as quick as possible. Because that what it goes to is like, hey, I've been calling like 4 CPAs and nobody's called back. Or I've been trying to talk to so-and-so and nobody's said anything back. And so that time is going to boost you to more sales. What I would also say is, even in the sales prospecting stage, is seeding that, again, that scarcity and urgency. So I'm sharing my calendar just so I can show you guys. But one of the things that I do that's worked really well is, if somebody wants to book a call with you, do not let them book more than 5-10 days out, because calendar, and this is what's not, I don't actually get paid from Calendly, but the way that my availability is set up, so this is my roadmap call, they're only allowed to book this thing 5 days in advance. So when they see this is the only option that they have to book. And and what this does is seed into that, okay, this guy is very high in demand, he has limited time, obviously, and it just adds to you being able to sell what it is that you want to help people. And I think with the education space, and there's a lot of bad actors there, where they get people on a webinar and then they try to sell people into this course or this product. I'm a very big believer in giving the value first, giving so much value, and then not asking for anything in return, but only strategically do you ask, right? Only strategically do you ask, because through all your content and your social media and just being interactive with your audience, you're building up a bank of goodwill, like literally an imaginary bank of goodwill. And as you offer this freebie or this training or this course or everything that's at free, you're building that bank. And then when you're going to ask your audience, that's when you're drawing from the bank. Hey, I only got room to take on 5 more clients this month. Like, here's a link to get on my calendar, right? You're drawing from that bank when you go to sell. But it's this imaginary bank of goodwill that you're building when you are sharing a lot of your value.
Yeah. Again, I've said this so many times, and I don't want to take up more time, but this is literally the exact thing that we help our clients with. Is you've got to build the expert status. You build the expert status by giving away your knowledge in a meaningful way that's more valuable than what people typically charge for. And that analogy of the bank, I use that analogy all the time. I love it. It's such a good, meaningful representation of just like, there is a tangible asset of goodwill. And the more of the goodwill that you can build and develop, the more likely your audience is to trust and want to engage with you and buy ultimately for higher price points. So I'm going to actually take a small shift away from the marketing and the sales side, just because this has been incredibly informative. And I'm afraid if you keep talking, no one will ever have a reason to work with me, Ryan. No, I'm joking, obviously. No, Ryan.
Come over here, guys.
Yeah, go work with Ryan. I think he's probably selling something similar in the not so distant future. But no, many opportunities out there. I know what it's like. But one of the things that people are curious about, especially going from solopreneur, you've clearly got a team now. What was the first strategic hire you made? When did you come to the realization, like, hey, I'm going to go faster with a team by my side? Just talk a little bit about the operations piece of this as well, if you wouldn't mind.
You said it best earlier, that a lot of accountants, they have that control and that trust, and it's hard to delegate out the work. My first ever real hire was the social media person, right? I don't have time to go and clip and spend time editing it. So that was actually my first hire, and I still have him today on my team working with me. He travels to events that I have. He does everything for me. He's kind of like my one point of contact. He's obviously got a team below him too now. And I would say my other hires, so I've hired 2 CPAs to work for me, 1 non-CPA. I had to let him go There's just some things that don't work out. If you guys know who Brandon Hall is, he tweeted one time, like, you want to hire fast but fire faster, because sometimes people, it takes, if it looks like it's going to take a long time to train and educate that person, then it might be time to, you may not want to put that effort and investment into them. But I would say with hiring people, they have to have very good technical knowledge, expertise that you can trust, and they're obviously going to be trained by you, but you need to focus on what your genius zone is, right? So my genius zone, again, is taking those topics that are extremely complex and boiling them down to something that everybody can understand. I don't have time to do tax returns or look at tax returns. I review high-level tax returns. Hey, we have a client with a $200,000 tax liability this year, or whatever. I might review some higher-level returns, but it's hiring and trusting the people that you hire to kind of do that work for you. And there's a term out there where it's like, hey, if somebody can do the job 70% as good as you, then outsource it. Yes, to an extent. Obviously, in CPA firms, we have to be very technical with our knowledge, but I try not to do, I don't cut my own grass. I try to do grocery delivery when I can, but mundane, like kind of important, right? But still can be outsourced. And then there's I think this is where my CPAs are right now, where it's like really important, but still can be outsourced in this category, right? So understanding like what your genius zone is, and then trying to afford to delegate all the tasks that don't fall under your genius zone is crucial. So
we refer to it as your top 5 priorities, which is just where do you deliver max value in your business. And I find so few people either have that defined or even know what those things are. And to your point, when we ask them to do an analysis of how much time, it's less than 10%. And we just say, imagine what happens to your business in your life when even it's just 25% or 30, and let alone 80 or 100, it will radically change the way your firm operates. And that's a really great graph, and I appreciate you sharing that. I'm gonna ask you to do rapid fire responses, because I love the depth. I think this is amazing, but we've got a bunch of questions from chat that I'd love for you to be able to give responses to, and we've got a hard stop in 5 minutes. But hey, if you guys really like this interview with Ryan and would like to do more, let us know in the comment section. Let us know. Just say, hey, bring this guy back on. We want to learn more from him. And I'm sure Ryan would be more than happy to hop onto another interview with us. So this is usually one of the hotly debated topics. I'm sure you've seen the Twitter threads, but revenue per team member, if you're willing to share. I think you said you've got 2 CPAs, you got your social media guy, and then you. So what are you looking at in terms of revenue per employee right now, approximately?
I would say at least 2x salary.
Okay, at least 2x salary. Okay.
Yeah. So if I have let's say I have a CPA, and when it's all said and done with payroll tax and everything, they're getting paid 90 to 100. Like, I would want that person to be in charge of 200, 250,000 of revenue. I'm implementing processes to obviously get that number of revenue per CPA up, but that's like a bare, because when you think about margins, like that's a bare minimum, right? Because that's 30-40% of your sale on the tax return going to, but again, that quite honestly, a lot of my money is made in that education and that training space, not even really on the tax prep side. Tax prep really is like that. I don't know what the term of it is, but you're going to have lower margins on the tax prep side. But this education and the stuff that we're teaching today, you're going to have 60, 70, 80% margins on there. And when you get like a sliver of it, you're not going to want to do tax returns anymore, I promise.
Yeah. And one of the key things, what was one of the key things you attribute to the biggest revenue jump in your journey so far? What was maybe like the one thing when it just really surprised you how well it worked?
Yeah, I think it's the cost is what you pay, but value is what you get, right? And realizing that, if you can save somebody $20,000, $30,000 in taxes, like, why are you just charging them $500-$600 for the tax return? Value-based pricing will quite honestly change your life. If you can prove to somebody that, hey, I can save you this amount, it's going to cost you 3 times less, like, then show that value to clients. Because the problem with an hourly charging, and I did this before, is you're going to get better at the craft of what you do. And so in return, like you're going to want to raise the hourly rate a little bit. And it's going to anchor the client to say, oh, well, I'm used to paying X, I'm going to pay this. And they're also not going to want to reach out to you as much. Like if they have, how many times have you had something where they don't tell you about something because they didn't want to pay for the hour of consulting time, and then come to the tax return, they screwed up big time and now they're paying for it? Yeah. So that's why the advisory relationship, it's a flat-based retainer for the year. And they're not going to get nickel and dime for every single phone call or email. That creates that relationship rather than just a transactional service. But I would say my biggest breakthrough was realizing the value-based pricing. If I'm able to save somebody whatever, and I'm charging this, like that anchors the value. And it could take me 5 hours to do that. It could take me 1 hour. It could take me no time, depending on, so, yeah. But versus an hourly model,
Well, hourly is just the idea. It's inverse in terms of what the client actually wants. The client wants speed to result, and you're incentivized to go slower. Not saying that people actually do, but it doesn't incentivize creating efficiencies in your firm. It penalizes that, yes, which is not a good idea in general. So I just want to get clarity on this. It was like the first priority is making sure you were a known entity and that you could create reciprocity with them. And then eventually you added in the different sales components, moved away from hourly, got into value billing, added the course, added the coaching. I think a lot of people imagine starting there, but you went through a pretty interesting journey there, which I like a lot. This one's great from Joy. How do you overcome perceived? How did you overcome the potential perceived perception of inexperience due to your age?
Amazing question. So I'd say two things. So number one is you have to have mentors, people that you can go to ask questions. So for me, that was other experienced real estate CPAs that kind of took me under their wing if I needed to ask questions. And so now I have a pretty deep referral network for real estate CPAs where I can, call them or text them to ask about a question. We kind of bounce ideas back and forth. Hey, have you seen this before? Here's the situation. Liability insurance, obviously, that's another one, right? You got to have professional liability insurance. And then at the end of the day, I would say too, so my fiance is a cardiac nurse. She saves people's hearts, right? So what we do at the end of the day is like, it's not life or death. We fill out government forms for a living. So kind of understanding that, like, I think the imposter syndrome, when I kicked the imposter syndrome, I think was when last year, I was speaking. So I spoke in front of about 800 people on a stage last year talking about taxes. And, there's a reason why I was the only one person up there on the stage of 800 people, is because I was the number one person to talk about that idea. And so that goes back to what I call the sphere of influence. And so your sphere of influence is super important to kind of like where you have that traction. The best example of this is think of like a nightclub. At the nightclub, the most important person there is the DJ, but on the street, he's just another guy or gal with tattoos, right? So understanding your sphere of influence, like where you have the most authority at, is super important and kind of does help you break that imposter syndrome.
Yeah, I always like the analogy of and president, right? When he or she is in the room, like that's who they are. But the president goes into the doctor's office and the doctor says, drop your pants. You listen to the doctor, right? So it's like, depending on the context of where you are, it doesn't matter who you are. It matters, again, like that sphere of influence, how much control over it do you have? And when you have it, you are the most highly sought after and listened to person in the entire sphere, regardless of who that other person is. Great point. This one's a little bit more tactical. It comes from David, and he says, what services are included in his tax packages? So you mentioned doing the filing. Let's just talk about the done for you one, right? Let's just say the highest level, just to keep the conversation like within scope here. When I come to you and I go, $15K, I want to work directly with you. When I sign that engagement letter, what are maybe the bullet items that I know are going to be deliverables back to me?
Yeah, so the first thing is understanding what are the prospects or the client's goals, not only from a short-term perspective, but also a long-term. The problem with tax is that a lot of people don't come to you until they have a really, an oopsie, right? It's just like, you call a lawyer when you're in jail, right? Kind of too late. But with that engagement, it's really understanding like what are some of the short-term goals, maybe 1 to 3 year, And then what are some of the longer term goals as far as maybe leaving their job or investing in a property so that they can have that financial freedom? Is a lot of times people don't even know what their goals are. And, I talked to a lot of doctor clients. This client, somebody I talked to last week, said, I'm going to replace my $500,000 doctor salary by buying rental properties. Okay, well, you just bought a property that only makes 20 grand a year. It's going to take you 25 rentals to do that. So how are we going to get to that goal by you buying that similar property, right? So they're going to get like a roadmap of, okay, if you can invest however much per year at this rate, assuming rate of return here, here's how quickly we can get you to your goal. We work with somebody where it's like, actually, she's just texting me right now. I project to retire within, in 10 years, and we kind of go through her plan, look at the equity that she has in properties or retirement accounts or overall cash. And I said, I think we get you there in 5 to 6 years, these growth rates, and kind of understanding those goals. And then it goes back to, okay, we're going to do prior year tax return is like an easy little bolt-on service that you can add where people just want to make sure that what they've done in the past is right. And for real estate, like, we encounter so many errors in whether it's done prepared by a taxpayer or prepared even by other CPAs, we uncover errors. And so getting them like on the right foot, and then it's bookkeeping review. So we don't do the books. I think somebody asked a question. I don't do the books, but I'll review their books. You have a cabin in the Smoky Mountains, but I don't see pest control as an expense here. You definitely have that because you have bugs, bears, and everything imaginable there. So I know you have that here. It's not here. Or you're missing, you forgot to back out your mortgage principal payment in your books. Do something like that. The tax planning of aligning what they're making this year with what they anticipate making in future years and aligning some sort of strategy along with that. And then really the big thing that we do in the overall package is that equity portfolio analysis. So I was doing all those things before this equity portfolio analysis part of it, because the thing with tax is it's a cost provider. So you can only save somebody so much money per year. And so you're only going to be able to charge, the amount that you're going to be able to charge is going to be capped. Versus if I can provide value to somebody to say, hey, this property is making you 2.5% per year. This money could be invested and made 15, 16% per year. That's a value, that's a above and beyond value add. And so I was doing all those other things before, but really that equity part of it, of telling people where they should park their money, and that was like an add-on that I was like doing for people anyway. And I was like, I should just charge for it. And so that's kind of what they get in the $15,000 package.
Just to tease out a little bit of this for everyone, just please notice how niche specific all of this is. And if I were a real estate investor and I had to compare what Ryan just told me in terms of a value proposition compared to what I heard from my local CPA who takes everybody with a checking account and a pulse, and his price was like, it could be 10 times what the other guy told me, I would pay Ryan. I wouldn't even. So if you're worried about price compression or commoditization or whatever the fancy term is right now to scare people, the only way to get away from that is to truly differentiate yourself with, yes, who you target, and specifically what you do, and more importantly, how it accelerates them to what they actually want. Notice Ryan was very clear. The tax piece is capped. And so if I want to increase the value, the tangible result that I provide to the client, I have to include and emphasize this piece as well, which of course was the portfolio analysis, which I really liked. Great question from Teresa here. Talk about his growing pains, those times in his business where it felt like a crunch to get to the next level, and how did he overcome those times?
To answer the question you asked, growing pains, I think the biggest thing that slowed me down so far is honestly bad clients, where maybe they're not a bad client, but the value that I was trying to portray to somebody versus what they had expected, it just wasn't aligned. And I think that's what has slowed me down. And so I'll give you 3 different categories of clients that are not going to be a good fit for you. I'll tell you right now. Number 1, people who can't afford you. Okay. So I'm not going to sell a $5,000 program to somebody who only makes $100 grand a year, because not only is it like, oh yeah, it's 5% of what they make, but the value that person has to get out of that program for it to be worth $5,000 to them is so much more than the person that's making $500 grand that's a real estate investor, because that $5 grand is just a drop in the bucket to them for that person. Am I giving similar value to both of those people? Absolutely, right? But that the client or the prospect sees is way different because of the price. So number one, don't sell high shit to people who can't afford it. Okay. You guys don't like me for swearing, or all right, don't sell stuff to people who can't afford it.
I have no preference one way or the other. You can curse as much as you like, man. Go ahead.
The second thing is be careful selling to people who have nothing but time. So if they're like fully retired, they don't work a 9 to 5, they don't work a job, whatever. Like, and that's all that they're doing, because all they have is like wanting to pick your brain, right? And so you're going to be like defending all these little questions and that, and try not to sell to people who have too much time. I prefer those business owners that are like, hey, I'm so busy in the business, but like I do got an hour a month to talk to you, or I got an hour a quarter to talk to you. Try not to sell to people who have too much time on their hands. Number 3 is do not sell to people who are not educated. There are still people that pay me that amount of money that do not know the basic answers to some first grade questions, right? And I think that's where the education and the content comes in, is because you can sell to more qualified leads based on their knowledge and experience, and then they'll be able to understand like what exactly it is that you're providing to them.
So Ryan, we've been on for almost 90 minutes here. Do you have any just final parting shots here? We ran through the questions that everyone had here, and this has been extremely informative. But anything at all that you think would just be extremely noteworthy or worthwhile for our audience to hear in the last 5 minutes?
I think I've given you guys everything that I have.
I doubt that. I get the sense you've got a lot to offer, and I'll tell you what, I've got one more question for you.
Okay, let's take the question.
Yeah. So my question is, I'm very big on both personal brand and then using your personal brand to build up a brand that is independent of yourself. And I get the sense you're very much on that path. But if I was a real estate investor and I went to learnlikeacpa.com, or if I saw Learn Like a CPA, I don't think I necessarily connect that to real estate expert. Are you simply offsetting that by having all of your content be so niche specific that it's impossible to confuse what it is that you're doing? Or just tell me a little bit about the name that you developed, Learn Like a CPA, and if you feel that that is beneficial to the niche, or if there's maybe some larger plan or some larger initiative that I don't quite necessarily see from what you're doing right now.
That's a very good observation. So when I first made my brand, Learn Like a CPA, that was when I was actually posting a lot of like personal finance content. So I was teaching people about Roth IRAs, teaching people about home ownership, dollar cost averaging, things like that, more on the personal finance side. And it kind of slowly developed into that real estate niche. But you're right, the branding, again, that's the problem with the branding, is it's very confusing as to what I do. And I am in talks with people to try to separate that out. I need to get my first lastname.com, so nobody please steal it from me, because I still have to sign up for it. But I have to go through some rebranding to separate myself and what it is that I do from like my firm and then future sort of operations. But so I would say this, I think when I first got started, I just ran, and I didn't really think much about it. It's just, I'm gonna start posting content. I'm gonna start, and then it was like all this volume and all this opportunity. And I didn't have this value proposition, the structure organized out to be able to sell people into, or to be able to convert on that. And I think there's an old saying, like, hey, if I had 12 hours to cut down a tree, I'd spend the first 10 sharpening my axe, or whatever it is. I think you need to know when to sharpen the axe and when do you just take action. Like if there's an opportunity that presents itself, I see this little niche opportunity here for these particular people, I need to know when to jump. And then I need to know also, okay, maybe I should spend some time sharpening my axe a little bit more before I kind of dive into that. And so now I'm kind of getting to the point where every little opportunity here is okay, I have to figure out, should I be sharpening my axe or should I just dive right in?
Very astute.
Cut the tree down. Yeah, I guess.
Yeah, I mean, I think one of the things I've realized in working with so many accountants, entrepreneurial accountants specifically, is the paralysis by analysis. You referenced, I think, perfectionism, or I don't think you referenced that specifically, or imposter syndrome, right? There are a lot of these things that are like living up here, which is like, I'm not good enough. Like I can't start. And honestly, the best advice I can give to a lot of people is progress over perfection. Like you can stare at the numbers or do hours and hours and hours of research. You can sharpen until there's no saw left or no axe left. You're significantly better off 9 times out of 10 getting like 80% of the research and starting, because when you take the step, it'll inform the next step. Like in Ryan's case, he started, like he said, on the personal finance side. And since he started, he developed probably better speaking skills. He learned more about the platforms. He started to get a few pieces of traction. He started to realize tapping into other people's networks is a much faster way to grow. But if he just sat staring and Google Universitying it, continuing to sharpen, he doesn't get anywhere. But then he has the experiences, like we all do, and that allows you to make a much more informed decision. So I don't know if anyone here is a fantasy reader, but one of my favorite quotes is, the most important step a man can take is the next step, or a person can take. So if you know what that next step is, just take it, and the next step will illuminate itself. But Ryan, this has been absolutely fantastic. I'm so happy we got to know each other a little bit through this. I'm very excited to keep tabs on your journey. I get the sense you're going to be a very heavily requested guest in the future. And just one last time, anything at all that you would like to share before we part ways here?
Yeah, there's no silver bullet, just 1,000 gold BBs. Just
extremely well
every
said.
single day, it's going to look a little different in your process. Nobody's going to be the same, but I think the fundamentals all are the same as far as, build that, become that person of interest, get that transfer or that law of reciprocity, right? Give more than you take, and then that transfer of authority, right? Using other people's networks and podcasts and their brand to help build yours. So.
Extremely well said. So yeah, thank you so much. And as always, please go and check out what Ryan's got. You can find him on Twitter. We'll have all of his links to be able to connect them down below. Obviously, please subscribe and like the episodes for Learn Like a CPA. He's got fantastic content out there. And it's been an absolute pleasure hosting you. And I hope you all found this to be valuable. Feel free to leave some comments down below on any questions you have for Ryan or myself, and we'll do our best to help you out. Remember, only you can create your dream firm, but we are here to help you every single step of the way. Have a fantastic rest of your workday. And again, thank you so much, Ryan.
Awesome. Bye, guys.